Hi everyone. So in this video we'll discuss about the option strategies. Uh, I've, I've got a lot of queries on how to trade these particular option levels which is shared on the website on a daily basis. I've recently started that. So basically, these are output of a scanner which we have developed. It will generate both buy and sell calls in options, and more importantly, it has nothing to do with option geeks. I mean, there are different ways of trading all the instruments. Like some people prefer option geeks, but we generally, when we follow Gann analysis, we generally follow basically on the price only. So we'll get the long above level, stop loss, targets. So basically, we have developed our system like that. And the beauty of this system is we'll always have risk to reward ratio of, we generally target the risk to reward ratio between 1 and 3. So if you see this, we have a long above 46 for this particular option. We have a 5 rupees stop loss and our target is 59. So it is with a 5 rupees stop loss, even the first target gets triggered, you get 13 points, with a risk of 5. So it is almost like 1 is to 2 risk to reward ratio. Now, having said that, again, this is not a holy grail. There are a lot of systems which can be developed, but we are comfortable with it. I'll just showcase you some examples. This is the post which I published on last Friday on monthly options. The same thing can be done for weekly. I mean, once the weekly expiry starts, we publish weekly levels also, and this is published every day before market hours. So you guys can go ahead and use these options, use these things to first. I would request you to backtest it. Backtesting is there a lot of data which has been shared before, so you can do that. So this is the output of a scanner which comes on day-to-day basis. So now I'll take this example. So now this week we are having a weekly option. So it says that you go long in 3300 call option. It gives you a long above level of 28 with a stop loss of 25 and first target is 35, 46 and 54. So what I generally suggest is most of the time it will, if the markets are in range, what happens is it will generally trigger target 1 and the probability of hitting target 2 is like 30%, and the probability of hitting the target 3 is almost 10%. Right, so basically plan to exit at least 50% of your positions around target 1. If the market goes trending, you will get the maximum, it will go till target 3. If it doesn't go, at least you can take a trade, book your profit around the first target. Now let's take this example, 3300 call options. I'll just open the chart of 3300 call option. We have to go long about 28, stop loss is 25. So I've drawn these lines. So this is 28, the market opened here. I wait for a 5 minutes candle to close above that level. So 28, it closed, this candle closed about this level, the closing is around 30. So now I'll put a stop loss around 20, sorry, target around 20, I mean my buy order around 28, which I filled, I mean, which got filled on this candle. I'll make sure that my entry is not like, if it is 28 is my entry, I'll maximum try to enter by 29. So I wait for a 5 minutes candle confirmation, let it close above it, because an options market will again come to a buy level and the trade will get triggered. So I got a trade here around 28. My stop loss is 25, which is here, and my target is 36. It made a high of 34.90. So my target was 35 point. Let's see our target. So target is 35.97. It made a high of exactly 34. So now in options, like, you need to be very fast in executing your trade. So you can, let me just open. You can move your stop loss to cost price. So 35 is the high. It didn't achieve our target, and here our trailing stop loss or the cost price stop loss got triggered. It is as simple as that. Again, it closed about 28 here. It closed about 28 here. Then it triggered the stop loss. So two times I get stopped out. I'll exit the trade. This candle I will not enter the trade because it has closed. The 5 minutes candle didn't close about 28. So again, be flexible in booking profit. So 36 was our target. It made a high of 35. Move your stop loss to cost price. You can exit somewhere here or move your stop loss to cost price. Let's take another example. Let's take a short call, put option short. Let's take 31,900 PE. It says go long above 116. This is the stop loss and these are the targets. And if you come down little bit, 31,900 P, we had a short call below 85 with a stop loss of 103 and 72 is the target. So 31,900 P we get here. So our buy was above 116. See here, the market opened at 920. This is 915 candle. The 5 minutes candle didn't close above 116. So I will never go for a long trade. Now I got a short below 85 here. I move my stop loss to 103. 5 minutes candle closed above it. I put a order. It got filled in this candle. The stop loss is kept here at 103, and my first target is 75. So which we got it. We can move our stop loss to probably this candle's high around 92 odd levels, and then wait for the next target which didn't come, so we exit somewhere here. So we got a trade from 85 all the way to 57, which was a quite decent trade. And important thing is we didn't go long because it never closed above 116. Let's take another example. Now let's take 3300. See, we have already taken. Let's take some Nifty example. So let's take 12,300 PE. What it says, 12,300 PE. You can backtest it. I've just opened the chart of few of them. So 12,300 PE is here. It says go long above 93 and go short below 77. Both the levels are there. 93 stop loss is 81, 77, 81 and 65 is our target. 12,300 PE. Our buy was never triggered at this candle, so we have to go long above. I'll just reconfirm the levels. I have to go long above 94 and short below 77. So 94 was never came that day. The high was 86, and I can go short below 77 with a target with a stop loss of 81. So here I went short around 77. The candle got filled. My 4 rupees stop loss got triggered. Again, it closed below 77 here. So I again went short. Here I will be able to fill my trade, and it did my target. So here also it triggered my stop loss because it closed above 77. So from 77 I can capture a trade till 60, that is 17 rupees move, and I lost like 8 rupees. So still I'm in net positive of 9 bucks. Again, the markets have been very sideways these days, so the probability of making money was very less on Friday, but again we were net to net, we were positive. So this is how we use this option system. So hopefully this video will help you out, and trade with extreme caution in options. Again, backtest the strategy, see if it suits your personality, be with the right position size, risk management. That's about it. Thank you.